Now, it's another hike of the monetary policy rate at the end of the 296th meeting. Yes, it was yesterday. Well, the increase this time is modest at 50 basis points compared to previous hikes. The impact of further squeeze on the real sector is recognized even by the central bank governor, Mr. Laimi Kaduso. Mr. Kaduso promises that as a regulator, the bank will be more attentive to implementation of policies needed to achieve desired results in the economy. For the 13th time, the Monetary Policy Committee of the Central Bank of Nigeria has displayed its hawkish stance, but this time by a moderate 50 basis point hike on the monetary policy rate. This makes the MPR 26.75% from 26.25%. Cash reserve ratio retained at 45% for deposit money banks and 14% for merchant banks. The meeting also retained liquidity ratio at 30%, while the asymmetric corridor has been adjusted to plus 500, minus 100.
This is hinged on monetary policy gaining further traction.
With food remaining a major factor of Nigeria's increasing inflation, the meeting has spoken on the need to watch the drivers.
In its consideration, the committee noted the persistence of food inflation, which continues to undermine price stability. It was observed that while monetary policy has been moderating aggregate demand, rising food and energy costs continue to exert upward pressure on price development.
The CBN governor also emphasizes the need for collaboration between the monetary and fiscal authority, even as he applauds the recent move to ease food prices through removal of import duties. However, this has been perceived as a short-term measure.
I think we need to think about the real issue. What do we need to do to be able to boost food production in Nigeria? That is what we need. We have so many research institutes in Nigeria talking about yield. I can't even see what they've done or what they've delivered in the past years that we've had them. We've talked about infrastructure, transportation. Now, even if you produce the food, how are you going to take the food down to where the food is needed? We talked about storage. We've talked about how much losses we're incurring. Right? And so we need to focus on infrastructure really and truly.
As the meeting watches out for the impact of the 50 basis point increase, they note with pleasure some positive macroeconomic indices, which includes increase in diaspora remittances, which is at $2.34 billion, as well as in capital importation, which stood at $5.92 billion as of June 2024. The CBN governor, Mr. Kaduso, says this is encouraging and a motivation for the regulator to remain intentional in not just policy pronouncement, but also implementation. Well, predictably, that's what we're going to discuss now with the Managing Director and Chief Executive Officer of Commercial Partners Asset Management, Mr. Tosi Osunkoya. Mr. Osunkoya, thank you so much and good morning.
Thank you very much. Good morning. Thanks for having me.
Great. So this is, I think this is like the lowest hike we've had since this hike or this hawkish sentiments began. And I know an analyst I spoke with yesterday did say that they don't expect this to bring any change to the market or some of the indices. Do you also agree with this?
I mean, we actually thought that they were going to hold steady, because we thought it was important for us to begin to see the impact of about 750 basis points to date. We're surprised, I mean, from our own perspective, we were surprised that there was another hike of 50 basis points. I think it was a mixed sentiment in the market. Some people thought that they should have, hold steady. Some thought they should increase by 50 to 100 points. I think overall, we need to begin to assess and evaluate the impact of these to a common man on the street. And again, I think the CBN governor mentioned the fact that for them, they are particular about the impact of these to the Nigerians. I think that there must be a mechanism that checks or evaluates how this impacts everybody in Nigeria. What would happen going forward, unfortunately, for H2 would be an austerity measure or austere period, in the sense that with the increase by 50 basis points, particularly if you look at the asymmetric corridor has increased by almost 500. What that means is the banks, anytime they go to the central bank for some respite in terms of funding, they will be funding at 31.75. That clearly means that for anybody or any manufacturer in the real sector, if you're looking to raise capital through the debt capital market or through the bank, you will probably still be borrowing at mid-30s. So, I mean, I don't know if you know anybody that can run a business sustainably between 30 or 35%. So for me, I think that it's about time we begin to look at the impact of 800 basis points that we've done to date. We also need to look at how we need to begin to look at the forward guidance. If you look at developed markets, what happens is after the assessment of what has happened in previous quarters, they will give you a forward guidance, and the forward guidance is meant to prepare you to, look at what would happen going forward. With that as a business, you will be able to plan. But I think it's an area that we are yet to address, and I think that it's important for us to begin to address that. That's number one. Number two, I think that the fiscal authorities, they need to have a complementary effort with the monetary authorities. And there was a time I was saying to someone that maybe the fiscal authorities, through their body, should also have a bi-monthly, meetings where they come and tell us what their plans are and what they've done to date and what they plan to do. If you continue increasing interest rates through, the MPR, what happens naturally is your cost push inflation will continue to go up. Don't forget that recently we've increased the minimum wage from 30,000 to 70,000. You are going to see the impact of that on inflation because there will be a demand pull. When you increase the minimum wage, what you are encouraging, or what would naturally happen, is that there's going to be increased consumption and aggregate demand. So you now have these two devils on both sides. All right, you have the cost push moving up as a result of increasing the interest rate, and those coming to the debt capital market are going at mid-30s. You also have the demand pool arising as a result of, the minimum wage. So those are the two things that I think that we will be battling with in the next few months. And don't forget that the FX situation is still unabated. Yes, there's been a convergence between the black market or the parallel market and the official market, but we are still struggling with addressing, the movements of the exchange rate, because yesterday I think it closed around 1,680. So you ask me, even if you've, done a palliative, which is a temporary palliative of a duty-free importation of certain commodities, that is just a quick win, okay? What would happen after 180 days? What would Nigerians be looking forward to? The major issue with inflation, outside of those two areas that I've mentioned, is the food inflation. And the food inflation, you need to arrest that situation by looking at the security around it. So perhaps if bi-monthly, the fiscal authorities through the Ministry of Finance and other bodies, they come together and say, oh, we have the security architecture to address security issue around agriculture, and we have plans to put the right logistics and transportation channels to bring goods from the market, from the farm to the market. And you can highlight all these plans, and Nigerians can see that truly you have a plan in place.
All right.
That would instill confidence inside and help, moderate inflation going forward.
All right, Mr. Oshola. So I believe that perhaps the central bank governor, because he did mention this issue of the fact that there needs to be a coordination between the monetary and the fiscal authorities. He did talk about the fact that They are conscious about how the policies affect the man on the streets. You know, he did talk about, obviously, the issue of food inflation, which security is a major driver. But I guess the frustration of the central bank would be that they are very limited in the instruments available to them, and so they are just using it. So how do you see moving forward now, how we can boost this coordination that is needed? And perhaps, as you suggested, if we have a bi-monthly, a monthly meeting, or, you know, conversation with the fiscal sector, perhaps that could also bring some light into the plans and the issue of security when it comes to do with food.
Yeah, I mean, you are right about the fact that the central bank, unfortunately, they are running out of arsenals to deal with, you know, the inflationary pressure. Okay, I think they are. I could also see that they are trying as much as possible to limit the number of hikes or the size of the hike, right? So the last one compared to this one, which is just 50 basis points, they are also beginning to feel that maybe the hawkish stance is coming to an end. But that concerted effort between those two hands of government must be hard, and at the same time, it must be transparent. Okay, because if you ask anybody, even within those of us that are sophisticated in terms of the financial and economic, issues, we don't see the handshake between both of them. It's as if they are working in silence, and I might be wrong. But when they come together, it's important for them to be transparent with this process, and everybody should see the impact of it. The same way you look at, all the efforts they're bringing together and the measures, there must be a mechanism to monitor the impact of that. I mean, if you look, for instance, the US government or the US economy, anytime there's an action by the Fed, you see the impact on certain data points from, job data. You see impact on retail sales. You see impact on PMI, which is the manufacturers index. You see the impact of that, and you're able to measure, the impact of what they've done to the results on the streets. And that is because of the concerted effort between those two bodies. But we're not seeing this. So my advice would be that going forward into H2, let them have a plan where they come together and show us a transparent process where both of them have a handshake and they have plans to carry us to, where we should be. For me, inflation is not just something that you can, abate with, all these monetary issues. There must be some effort coming from the fiscal side.
All right, Mr. Oshukoya, Mr. Tosin Oshukoya, the Managing Director and Chief Executive Officer of Commercial Partners Asset Management. We thank you so much for sharing your thoughts with us this morning.
Thank you for having me.